Trading like a Zen master. The art of letting go. Welcome to V-Invest, the channel where we explore the mindset and psychology behind successful trading. Today, we're diving into something special. Something that blends the ancient wisdom of Zen with the high-stakes world of trading. This video is called Trading Like a Zen Master. The art of letting go. If you've ever felt overwhelmed by greed, fear, or the chaos of the markets, this is for you. Stick around, because by the end of this journey, you'll learn how to trade with the calm, clarity, and focus of a Zen master. Let's get started. So, what does it mean to trade like a Zen master? At its core, Zen is about presence, being fully in the moment, free from attachment to the past or anxiety about the future. It's about letting go of what you can't control and embracing what is. In trading, this translates to a powerful mindset, letting go of emotional baggage, unrealistic expectations, and the need to dominate the market. The market is a wild, unpredictable beast. It doesn't bend to your will. But when you master the art of letting go, you stop fighting it and start flowing with it. Let's break this down into 3 key principles of trading like a Zen master: acceptance, detachment, and simplicity. These aren't just fluffy concepts, they're practical tools you can apply to every trade you make. We'll dive deep into each one, dissecting how they work, why they matter, and how to use them, with real-world examples to bring them to life. Principle 1. Acceptance. The market is what it is. The first step to trading like a Zen master is acceptance. In Zen, there's a saying, the obstacle is the path. In trading, the obstacle isn't just a bad day or a losing streak, it's your resistance to reality. The market doesn't care about your hopes, your dreams, or your perfectly crafted plan. It moves how it moves. And fighting that truth only leads to frustration and mistakes. Think about it. How many times have you seen a trade go against you and thought, this shouldn't be happening? Maybe you doubled down, hoping to force the market back in your favor. Or maybe you froze, unable to cut your losses because you couldn't accept you were wrong. That's the opposite of Zen. A Zen master doesn't argue with reality, they see it, accept it, and act accordingly. Deep dive into acceptance. Let's unpack this further. Acceptance isn't passive, it's active. It's about recognizing the market's state without letting your ego or emotions cloud your judgment. When you resist what's happening, say, a sudden drop in price, you're not just denying the market, you're denying yourself the chance to adapt. That resistance creates stress, and stress leads to impulsive decisions. You might overtrade to fix the loss, or hold a losing position too long, hoping for a miracle. Either way, you're digging a deeper hole. Consider the psychology here. When a trade goes wrong, your brain kicks into fight or flight mode. Your amygdala, the fear center, lights up, screaming, danger, do something. Without acceptance, you react. You chase the loss. You panic sell, or you double your position to prove you're right. But a Zen trader steps back. They breathe. They say, this is the market right now. I don't like it, but I accept it. That shift calms the mind and opens the door to rational action. Take Sarah, a trader I'll introduce you to. Sarah was trading Bitcoin back in 2021 when it hit $60. She'd done her homework, spotted a breakout pattern, and went long with a solid position. For a moment, it looked perfect. Bitcoin climbed to $62, and she was up 10%. But then, out of nowhere, a tweet from a big influencer tanked the price. Within hours, Bitcoin dropped to $55. Sarah couldn't believe it. She kept saying, this is ridiculous. It'll bounce back any second. She held on, refusing to accept the shift. By the time she finally sold at $50, her 10% gain had turned into a 15% loss, all because she couldn't let go of what should have been and face what was. Now, let's analyze Sarah's mistake. Her resistance wasn't just emotional, it was technical. She ignored her stop loss at $58,000 because she couldn't accept the market's new direction. If she'd embraced reality the moment Bitcoin broke below her key level, she could have exited with a small profit or a minimal loss. Instead, her denial cost her 25% of her position's value. That's the price of fighting the market. But acceptance goes beyond losses, it applies to wins too. Imagine you're in a winning trade, and the price keeps climbing past your target. Greed kicks in. Why exit now? It could go higher. Without acceptance, you overstay. And when the market reverses, you lose your gains. A Zen trader accepts the win as it is, takes their profit, and moves on. They don't need the market to keep giving, they take what it offers. How to apply acceptance. So, how do you build this skill? It starts with awareness. Next time a trade moves against you, notice your reaction. Are you clenching your jaw? Refreshing the chart obsessively? That's resistance. Pause. Take 3 deep breaths. Inhale for 4 seconds. Exhale for 6. This resets your nervous system. Then ask, what's the market telling me right now? Look at the price, the volume, the trend. Is it breaking a support level? Is volatility spiking? Accept the data, not your feelings. Next, act decisively. If your stop loss is hit, exit, no excuses. If the trade's gone beyond your target and momentum's fading, lock in the profit. Don't negotiate with reality. Over time, this practice rewires your brain. You'll stop seeing losses as failures and start seeing them as signals, part of the market's flow. Try this experiment. For your next 5 trades, commit to accepting the outcome. Win or lose, write down what happens, how you felt, what you did, and the result. You'll be amazed at how much calmer and more effective you become when you stop battling the inevitable. Principle 2. Detachment. Letting go of the outcome. The second principle is detachment. Letting go of your attachment to the outcome of any single trade. In Zen, attachment is the root of suffering. In trading, it's the root of blown accounts and sleepless nights. When you're glued to every pip, every dollar, every tick of the chart, you're not trading, you're gambling with your emotions. Here's the thing. No matter how skilled you are, you can't control the market. You can analyze trends, study patterns, and set perfect stop losses. But at the end of the day, the outcome isn't yours to dictate. A Zen master knows this. They focus on what they can control, their process, their discipline, their risk, and release the rest. Win or lose, they don't cling, they let go. Deep dive into detachment. Let's explore why detachment is so hard and so crucial. When you place a trade, you're not just investing money, you're investing hope, time, and ego. A winning trade feels like validation. I'm smart. I'm good at this. A losing trade feels like a personal attack. I'm a failure. That emotional attachment ties your self-worth to the market's whims. And that's a recipe for disaster. Psychologically, attachment triggers what's called the sunk cost fallacy. You've put so much into a trade, hours of analysis, your hard-earned cash, that you can't bear to let it go. Even when it's clearly failing, you think, I've come this far, I can't quit now. So you hold a losing position, praying for a turnaround, or you overtrade to chase a win. Either way, you're not in control, the market is. Because you're tethered to the outcome. Let's look at James, a stock trader who learned this the hard way. James was riding high after a string of wins in the tech sector. He turned $2,000 into $5,000 in a month. And he was hooked on the rush. Then he spotted a hot stock. Let's call it TECHX, breaking out at $100. He poured $4,000 into it, dreaming of a 50% gain. The stock climbed to $110. And James was already counting his profits. But then it stalled. News hit about a supply chain issue. And TECHX dropped to $95. James couldn't let go. He was so attached to his vision of success that he held on, telling himself, it'll turn around, I can't lose this one. It didn't. TECHX sank to $80. And James lost 40% of his account, $1,600, because he couldn't detach from the outcome. Now, let's break down James's error. His attachment wasn't just to the money, it was to the story he'd built in his head. He saw TECHX as his golden ticket, a chance to prove he was a top trader. When reality didn't match that story, he clung tighter, ignoring the warning signs, a broken trendline, falling volume, negative news. If he'd detached, he'd have cut his loss at $95 and walked away with $3,800 intact. Instead, his emotional grip cost him dearly. Detachment also applies to wins. Ever hit your profit target but stayed in, hoping for more? That's attachment too. The market gives you a gift, but instead of taking it, you demand more, until it takes it all back. A Zen trader doesn't do that. They set a goal, hit it, and let go. They're not greedy for more, nor devastated by less. How to apply detachment. Here's how to cultivate detachment. Before every trade, define your why. Are you trading to test a strategy? To grow your account? Write it down. Then set your parameters: entry, target, stop loss. Once the trade's live, treat it like an experiment, not a referendum on your skill. Watch it unfold without getting sucked in. If you feel yourself obsessing, checking the chart every minute, step away. Go for a walk, make a coffee, anything to break the cycle. Another trick: visualize the outcome beforehand. Imagine the trade hitting your stop loss. How will you feel? Now imagine it hitting your target. Same question. By preparing for both, you weaken the emotional pull of either. When it happens for real, you're less likely to overreact. Try this for a week. Place your trades, set your levels, and don't touch them unless your plan explicitly says otherwise. Note how it feels to let go. You'll find that detachment doesn't just save your account, it saves your sanity. Principle 3. Simplicity. Less is more. The third principle is simplicity. Zen masters live simply. They strip away the unnecessary to focus on what truly matters. In trading, we often do the opposite. We pile on indicators, chase every signal, and overcomplicate our strategies, thinking more is better. But complexity breeds confusion, and confusion breeds mistakes. A Zen trader keeps it simple: a clear strategy, a few reliable tools, and a steady mind. Deep dive into simplicity. Why do we complicate trading? It's partly ego. We want to feel smart, sophisticated, like we've outsmarted the market. It's also fear. If I don't use every tool, I'll miss something. But here's the irony: the more you add, the less you see. Too many indicators create conflicting signals. One says buy, another says sell, and you're paralyzed. Too many timeframes muddy the picture. Is it a trend on the hourly but a reversal on the daily? Complexity doesn't clarify, it clouds. Let's look at the numbers. Studies show that most successful traders use fewer than 3 indicators. Why? Because the market's core drivers, price, volume, momentum, don't need a dozen filters to reveal themselves. Overloading your system doesn't make you safer, it makes you slower, less decisive, and more prone to error. Take Priya, a futures trader who learned this lesson. Priya started with a simple system: trading S&P 500 futures using a single moving average and support levels. It worked, she made consistent gains. But then she got ambitious. She added more indicators: RSI, MACD, stochastic, watched every news headline, and traded multiple contracts at once. Her screen looked like a NASA control panel. But her results? A mess. She missed entries because RSI said wait while MACD said go. She second-guessed exits because the news contradicted her chart. In 1 week, she lost $2, half her gains, because she couldn't see the forest for the trees. Finally, she stripped it all back to her original setup: 1 indicator, 1 time frame, 1 contract size. Her profits returned, and so did her peace of mind. Let's dissect Priya's journey. Her simple system worked because it matched her strengths. She was good at spotting trends and support zones. Adding complexity didn't enhance her edge, it diluted it. She spent more time decoding signals than trading them. When she simplified, she regained focus. Her decisions snapped into place. Price is above the moving average. Support holds, buy. No clutter, no hesitation. Simplicity also saves mental energy. Trading is already a high-pressure game. Why drain yourself wrestling with a convoluted setup? A Zen trader conserves their focus for what matters: reading the market, not their dashboard. How to apply simplicity. Here's how to simplify your trading. First, audit your setup. List every tool, indicator, and time frame you use. Ask, does this make my decisions clearer or harder? If it's the latter, cut it. Aim for a system with 1 primary indicator, say, a moving average or price action, and 1 confirmation. Like volume, stick to 1 time frame that suits your style: daily for swing traders, 15-minute for day traders. Next, test it. For 20 trades, use only your streamlined setup. Track your results: win rate, profit, emotional state. Compare it to your old, cluttered approach. Most traders find they trade better with less, fewer mistakes, faster execution, calmer nerves. Finally, resist the urge to tinker. Once your simple system works, trust it. Don't add a new indicator just because the market shifts. Adapt within your framework. Simplicity is a discipline. And discipline is Zen. Lessons from legends. Livermore and Darvas. To bring this home, let's look at two trading legends through a Zen lens. First, Jesse Livermore, one of the greatest traders of the 20th century. Livermore made millions shorting the 1929 crash. But he also lost it all, multiple times. Why? He struggled with letting go. When he was winning, he couldn't detach from the thrill and overtraded. When he was losing, he couldn't accept reality and held onto sinking positions. Livermore once said, "The game of speculation is the most uniformly fascinating game in the world. But it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance." A Zen master would agree, without balance, without letting go, you're doomed. Then there's Nicholas Darvas, who turned $36,000 into $2 million in the 1950s. Darvas had a Zen-like approach. He traded from a distance, using telegrams to place orders, detached from the daily noise. He kept his system simple, a box theory based on price ranges, and let go of the need to chase every move. His success came from focus and discipline, not overcomplication. Darvas wrote, "I have no ego in the stock market. If I make a mistake, I admit it immediately. That's the art of letting go in action, putting it all together." So, how do you trade like a Zen master? Accept the market as it is, don't fight the waves. Surf them. Practice by breathing through resistance and acting on reality. Detach from the outcome, focus on your process, not your profits. Build this by pre-planning and stepping back. Simplify your approach, less noise, more clarity. Streamline your tools and trust the essentials. Start small. Next trade, pick one principle to practice. Maybe it's accepting a loss without cursing the market. Maybe it's setting a plan and letting it run without interference. Or maybe it's cutting your indicators in half. Build from there. Trading isn't about perfection, it's about consistency. And consistency comes from a calm, centered mind. The art of letting go isn't just about trading, it's about life. The more you release fear, greed, ego, the freer you become. The market will test you. But with a Zen mindset, you'll pass those tests not just as a trader, but as a master of yourself. What do you think? Have you ever struggled to let go in trading? Share your thoughts or stories in the comments. I'd love to hear them. If this video resonated with you, hit that like button, share it with your trading crew, and subscribe to V-Invest for more psychology-driven insights. Don't forget to ring the bell so you never miss a new release. Thanks for joining me on this journey. Stay calm, stay focused, and I'll see you in the next video.